What's going on, Monday Morning Live? Hope you enjoyed your time with Brandon and Nick Black talking about the cryptocurrencies, but right now we're bringing in Tom Gentile with Power Profit Trades. We're doing it in 5, 4, 3, 2.
Hey everyone, Tom here. Welcome to Power Profit Trades. This is our Operation Surge Strike Edition, Tuesday, March 29th, 2022. Oh gosh, next hour, what are we going to take a look at? We're going to take a look at a volatility and market check, see where we're standing as far as the market, stocks, bonds, currencies, commodities. Oh yeah, we got to talk about crypto too. Even though it's not Crypto Monday, we are on Crypto Watch and watching Bitcoin and Ethereum right now. We're going to go inside my Brutus software again this week. I want to show you an overview of what we see happening on the earnings front. All right, I got that. I've got stocks to look at. I'm going to take requests from your chat too. Both of you here, Money Morning Live and YouTube. We got a lot to go through.
Messed everything up.
Eric, we good?
Yeah, we're good.
All right, man. You sound a little scratchy today.
Yeah, sorry about that, Tom. We're out of our normal situation right here, so tech is a little different, but we're working through it.
All right, cool.
It'll be fun.
Cool. Well, hey, I've got to tell you, I'm pumped. If we were to take a look real quick before we get into the stock market, I look at top stories every day, and this is one of the easiest ways to do it. There's over, am I saying this right? 10 billion stories today in the world. 10 billion with a B. I'm only interested in the ones at the top of the screen. This is nothing new. Russia invades Ukraine, live updates. That's CNN's version of trying to get their ratings up. White House records turn over to House to show 7-hour gap in Trump phone log. Omicron, hey, it's back in the news again. BA2, the dominant strain, the CDC is saying. Something about Ocasio-Cortez. Let's just move on to that. From that one, Biden's budget proposal. It looks like taxes are back on. Tax hikes are back on. I think I saw corporate tax rates going back to 28%, perhaps. Top tier going to 39.6%. And anyone making more than $450,000 is going to get a price hike. And then what was it also? A billionaire's tax hike. Did you hear that, Eric? The billionaires are going to get a tax hike. Dude, I feel like you're not with me today. So do me a favor, folks. Let me know if you're with me, because I'm getting nothing on my end. I'm not hearing from anybody. If you guys are listening to me on YouTube, give me a shout. If you're on Monday Morning Live, give me a shout. I got to know that I'm talking and that you're hearing what I'm talking about. So
you're talking, we're hearing it, Tom. The chat's with you, buddy.
All right, dude. Just checking. I
Sorry
lost
about
you there.
that. I know. That's my fault.
Or were you just talking to me and you had the mic? You were
being
muted.
shy. I'm being shy today, Tom. It's one of those days.
All right, cool. All right, let's go ahead and get into the stock market. First, Bitcoin. All right, so this is really what I like to see here. We get that big run up. Okay, now we've got Saturdays and Sundays on here too. So, we've got today. Here's Monday's move. This was Sunday. That was the big move that gapped everything that everyone saw coming into yesterday morning. But you know what I'm excited about, Eric? I'm excited about what we call the follow-through day, and that's what we're seeing right now. We're hitting 48,000. We're at 48,124 not too long ago. How long is it going to be before we get to 50? How many of you in the room see 50K in Bitcoin's future by the end of this week? Because I certainly see it.
I wouldn't be surprised, Tom. The whole market's looking good right now.
It really is. And the great news is that Bitcoin is back on the run regardless of what the stock market's doing. We've been talking about this for a while. When is it going to decouple? When is it going to decouple and start to move onto itself and not what the stock market's doing? I'll tell you what, this was having an effect right now on something we will be talking about in a few minutes, bigger than anything. All right. So hold your breath on that one. I'm going to show you the ETF of the week that is definitely not moving in the right direction of Bitcoin. Bitcoin's taking its money, taking its lunch money. So we'll talk about that in a moment as well. If you think you know what it is, put that ETF in the chat box. Let's see if you're right or wrong, or let's see if you're connecting with me. So that's Bitcoin. We'll take a look at it again tomorrow, but getting some nice follow through. Stock charts. This is where I want to go with, guys. So I want to start with a 100-day chart. That takes us back into the all-time highs for most stocks back in November. So you're looking at SPY. I'm going to add on something that we look at with Brutus, and that is the 7 to 30-day implied volatility. What are the option traders thinking is going on right now with the assets we're going to be looking at? First up, SPY. As you can see, I've got SPY, the chart itself. For those of you new with us, welcome aboard. And I want to explain to you what it is you're seeing here. The candlesticks, that is the price of the asset. In this case, we're looking at the SPY. That's the SPDR, S&P 500 ETF. The red line below, this is not a moving average, okay? If you're new, then you might be interested in knowing what this is. If you've been with us, you know exactly what this is. This is what the option traders are pumping up and pumping down option prices, all right? Near money option prices. As you see this red line jump up, it means that premiums are going up in value. It's almost like a fear factor, okay? So as we jump up, traders are getting more fearful. They don't know where the market's going to move from day to day, and they pump those option premiums up to compensate for what they don't know. All right, it's we call it the angst of the market. As it moves down, they get a little calmer. As you can see here at the end of the year, I mean, we had the options on SPY nearly as low as they've ever been. As we were very calm at the end of the year, trading above 475. Then dipped down. You can see as we went down, fear came back into the market. As we rallied, fear kind of subsided. Then we dropped to lower lows and we jumped to higher highs. As you can see, the highs at the end of February eclipsed the ones at the end of January. But look at what's happened just in the month of March. We started the month of March out near the lows for the year with the S&P. Where are we at now as we get close to the end of March? We've had a nice rally, and look what's happened. The option traders, well, the premium buyers have gone away, and this has been really kind of a seller's market in terms of the volatility on SPY going lower. So what have we learned about this chart? In the last month, option prices have gotten cheaper. Let's move on. Now, another part of what I like to do when I'm assessing the overall markets is look at the big dogs. All right, look at the big dogs right now in the room. SPY is a big dog. TLT is also, gives you kind of a landscape of the market. So if you take a look at TLT, this is the iShares Barclays 20-year Treasury ETF. Looks kind of boring, all right, going from 150s down to the 130s. This is not boring. In fact, this is exciting for the bond market, all right? When you think of safety in the markets, going back long term, there are two areas I look to, the US dollar and the bond market. Right? But when you see the bond market make these kind of moves here just in the last couple of months, it just gives you an idea of how nervous everybody has been about the overall move in the market and what's to be expected. All right, so we see that, again, bond market's fallen down. What's really causing this move? It's really one word, inflation. Inflation and the expectation of all these interest rate hikes are pushing the bond markets lower. We've dropped all the way down into the 120s. Right now, we talked about the break below 135, and we broke below 135 a couple weeks ago. We dropped all the way down to 128. A little bit of a rally today, not much of one, but expect this asset to continue to fall as interest rates continue to rise. All right, moving on. USO. Okay, so big drop in this yesterday. I think I saw oil down almost 10% at one time yesterday, and USO was following right along with oil. If you take a look at what's happened here in the last 100 days, we've rallied. USO is the United States oil ETF that we follow. Trading below 50 back around Thanksgiving. Went as high as 88 before dropping very quickly down below 70. We've made another rally back up, and in just the last 5 days, we've gone from above 80 to now trading just below 75. Oil's trying to get its footing. Here's what I think about oil. Short term, it's a tough trade. Long term, this thing likes to move higher into the summer months. We see demand coming out of spring break. We see demand coming out of summer travel. And all of that demand is going to slowly put pressure on oil, gas, and ETFs like USO. So I still see 85. I see 85 as my target, but it's not going to, I don't think it's going to happen tomorrow or next week. I think this is going to be a multi-month event. We're going into April. We've got April, May, June, and then part of July. We got over 3 months for this pattern to continue to move higher. Starts in mid-February, ends around mid-July. Just keep that in your back pocket. All right, moving forward, GLD. Hey, here's the one. If you answered my question, if you put in the chat, what ETF is Bitcoin most affecting right now? It's affecting gold, right? Let's back up, look at gold and look at GLD, which is the Spider Gold Shares ETF. Spider Gold Shares was really kind of bottoming down here in the high 160s, made the run up this year from 167 all the way up to really almost hitting 194. This was very, very close to all-time highs. Since then, we put in this, looks like a head and shoulders top. It almost looks like a head and shoulders top if you call this a shoulder, and then you call this a head, and you call this a shoulder, and we're busting below the neckline here. So how much farther down can we go? Yeah, we could definitely come back down into the 160s. I really see this double line support. You see this resistance level right here around 175, and then again at 175. That looks like it could become some very interesting support. All right, we're at 178.34 right now, so we're not that far away. And when I took a look at gold itself, this GLD was down about 0.4%. Gold was down at the same time about 1.3%. So the precious metal itself is getting pushed down much harder than the ETF. Okay, so we would look to see either the precious metal kind of bump back towards the ETF, or the ETF could sell off. And it causes that rubber band effect, folks. You know, that rubber band effect. When one's going up and one's going down, they can only stretch because they're basically the same thing. They can only stretch so far before they revert back to each other in one form or another. So that's GLD. Let's take a look at the VIX. So the VIX itself is trading down around 20, maybe down a little bit below 20. That's been something that we've been looking at for some time now. How about VXX? This is the one that I follow. It's the VIX futures. You take a look at the VIX futures, and you can see now in this case, the implied volatility is moving right lock and step with the VIX futures because they are basically one and the same. So just take a look at the candles here, and you'll see 30, and you'll see 28, and then you'll see that big spike up to 42. Now, this was had nothing to do with the overall stock market, folks, okay? What's going on here is Barclays. Barclays manages the VXX. Barclays does what's called creation for the VXX. So when we see the VIX going up, Barclays is creating more contracts. Back here, they stopped creating these contracts for the day. You saw this big run up and then subsequent push back down. Now, we were looking at this, the team and I were like, something doesn't smell right here because we didn't know what was going on. But for this thing to go from 30 all the way up to 42 and then back down to 30, we knew somebody screwed up somewhere that manages this company. By the time we had time to figure it out that it was Barclays, what an interesting sell, what an interesting short that could have been had on Barclays stock itself, because they just came out last night with some news that they're writing off over $500 million in losses from this screw up that they did, and traders taking advantage of it. Anyway, take out the candle and you'll see the highs were really kind of right around 30. We're dropping back down again. We're around 24.5 on VXX right now as moving forward. Okay, let's talk about a couple of very popular names while we're on this market and volatility check. And I want to go to Facebook first. Facebook went from, this stock that was just really kind of trading between 300 and 350. Earnings came out couple of months ago, and then the big drop that everybody, the gasp, as more money was lost in one day, more market cap was lost in one day on this stock than had ever been lost before. Since then, we've seen $250 go down to around 180 and change. Let's call it 188-ish. Looked really good. The fundamental traders gobbled it up, and here we are. And now we're, and I mentioned on the program that if you like Facebook, 200, wait for it to get back above 200, and that looked like the buying opportunity. Well, guys, we're at 227 right now. Here's my thoughts about Facebook if you want a quick down and dirty from me and our research group. These guys make a lot of money. Advertising, they make a ton of money, all right? And they really are, to me, a value somewhere between 250 and 300. Below that area, 250 to 300, I see as the estimated value. Here's the problem I got with Facebook. I'm not quite sure the metaverse I think they're dumping too much into this. Right now, you hear Gen Z, they don't like it. There's a lot of problems happening, and how do I know this? I'm barely a Gen Xer. How does a Gen X know what Gen Z is doing? Well, because I got a bunch of Gen Zs. They're called family, and Gen Z's telling me that the Gen Z community really isn't attaching themselves to the metaverse right now. Now, that being said, there's nothing like a good recession that brings people from virtual reality back to reality. And so if this is kind of a setup for the next leg down, not for Facebook, but for the overall market, then I think you might see Facebook trending back down. But I don't see it. I can't see the business model right now. Maybe I'm missing something, but as of right now, I don't see the business model. I do see it as an attractive trade right now, but you're going to run into some resistance up here at 250, which was the top before after the drop. The top after the drop for Facebook. Let's move along. I will say this. What do these stocks all have in common? Facebook, Apple moving back to the top of its area. This is definitely a great sign. What did Apple come out with news of yesterday? They're going to cut production of the iPhone SE by 20%. The SE is the cheapest phone in the lineup. If they're cutting production on the SE, what does that mean? That means that either nobody's buying it or they'd rather put the production into the expensive phones. And that's the way I'm seeing it. That's why you're seeing Apple actually going up on this news after first dropping yesterday. So there's Apple. All right. What do these stocks all have in common? I'm going to answer that when we get to Tesla. Amazon. Okay, so Amazon, $37.50 all the way down to $2,700. It double bottomed at $2,700 before rallying. Now we're at $33.80. We're past the middle of the pack, but we are going to be running into some resistance here. It's happening right now for symbol AMZN. What do these stocks all have in common? Let's look at Netflix, NFLX. NFLX, again, this almost looks like a Facebook move, where one moment we were at above 500, and the next we're down to 350. Again, unlike Facebook, Netflix has not shied away from their business model. The problem with Netflix is everybody else is doing it. Okay, if you happen to have tuned into the Oscars like me after you found out about the fight that was potentially going to break out on stage. What you saw was movies, you saw films, you saw actors, you saw actresses getting nominated for movies that were not Hollywood movies. They were streaming movies. So we saw streaming movies from Apple. We saw streaming movies from Hulu, Amazon. I didn't see any streaming movies that came out from Amazon. But what I'm saying is that Netflix has a lot of competition that they have to deal with. And also, the price to pay for these actors and actresses to make movies on your set is becoming higher than it ever has been. Inflation is part of that, but keep in mind, competition is part of that too. So I'm going to throw it out there, if you're a Tom Cruise, if you're somebody who's a headliner, an actor or an actress who's an A-lister, you got a lot to choose from now. It's not MGM or Fox. You've got all of these areas and all of these folks producing content, and they're trying, and it's like a bidding war out there. So that's the problem that's going on with that Netflix is suffering from right now. But what do these stocks all have in common? Let's take a look at Google. Google, which was my favorite of the bunch in terms of trending. You got to go back beyond 100 days to see that. But take a look at Google. 1, 2, 3, triple bottom down here, just above 2,500. And here we are now, 2,857. All right, getting back up close to that high. Remember the earnings report where we were at 2750 one day, and then we opened above 3,000 the next and then fell after that? All right, yeah, I was part of that move. But here we are. We're running back up. I'm not in this one. And I'm looking at it thinking, where do we go from here? It is making new resistance points. And its next resistance point is back up here at 3,000 again. So Google is looking really good. What do these stocks all have in common? Tesla. Lower highs, lower lows. Lower highs, lower lows. Lower high, lower low. A higher low and a higher high as of right now. Higher high as of right now, 1,089 for Tesla. And Tesla's not too far away from its all-time highs, okay? Again, the volatility traders, you can see where the vol spikes. The vol spikes on Tesla on days when it has a huge drop of 150 points or more, or if it's got earnings coming out, all right? But lately, it's kind of been moving sideways. Now, as I get back to the SPY, what do these FANG stocks all have in common? Eric, do you know? Is anybody out there? I've only asked that question 6 times.
I don't know. Let's take a look at the chat right now and see what they are all trying to say right now.
Yep, and I'm going to see if anybody over at YouTube is with it. We're here. I'm with you, loud and clear. So the guys on YouTube are still commenting that all is good, and then they can hear me.
They see. Well, that's all right. We say 50%.
Well, we have a delay on YouTube. I just didn't realize it was 10 minutes.
I hope it's not that big. We have a one-to-one move. They seem to be bottoming 50% of NAS.
There you go. That's really it. I mean, look at the last 2 weeks. All of these tech stocks that gotten crushed have all come back in a big way. Not all of them, but a majority of them, the big popular ones. The FANG stocks have come back in a big way. And so, as we move into, guys, by the way, we're almost about to get into earnings season again. I mean, it's only a couple weeks away. And so, when you think for a moment and you start thinking about, summarizing all this stuff I've talked about, the big takeaways are that the VIX closed back below 20. That was the first time since early February. That happened yesterday. Okay. We're having stocks that are coming back to, if they haven't hit their yearly highs yet, if they're either pushing through yearly highs, getting close to those, we're starting to see those yearly highs happen. Look at Bitcoin. I didn't mention this yesterday, but I should have. I mentioned it at the 1 o'clock at our 1 o'clock show. So Bitcoin has hit a new high for the year. It's at new yearly highs for 2022. Ethereum, new yearly highs for 2022. Let's put the charts back up. I got Bitcoin Watch going on right now. Take a look at Ethereum. Here's ETH, and ETH nearly clocked in 3,500. High was 34.83.87. Right now it's at 34.11. But I mean, we were there not that long ago. Right here, baby. 34.83. Definitely getting some follow through, and has literally just been up and up and up. I mean, the last time we saw a downtrend, this is good news. There's your downtrend right there. Okay. I mean, we saw bottoming going on in March. That bottom in March was down there below 2,500. Here we are. We're getting close to 3,500 earlier today. This is all good news, right? And again, you're seeing Bitcoin really start to bring, there's investors coming back into Bitcoin. Big wallets are now buying. They're on the buy side, draining out volatility. There's a short squeeze going on, not only in Bitcoin. And you might think, how do you short squeeze Bitcoin? Futures traders, those of you trading Bitcoin futures or Ethereum futures, and you were short, you're getting squeezed. If you haven't already gotten squeezed out of this, you're definitely close to getting squeezed. So that's something. Analysts, are saying that the short squeeze is pushing stocks higher. Even the folks on the network here, Chris Johnson, CJ, he's saying that as well. If it's true, we could see another jolt lower because after the short squeeze, there's a pause. We also could see a pickup in volatility because guess what's coming? I just said it. We got an earnings season coming out, and we're going to start talking about that. We're going to really start talking about that in about 2 weeks. So we've talked about our key asset classes, Eric. We jump back into crypto again.
Which I appreciate. Thank you.
I think we need to get into Surge Strike. Talk a little bit about kind of set the table for what's going to happen next month.
That sounds good to me. Let's dive into it. Yeah, for sure. Surge Strike, which is where you're going to be hanging out today at 1:00 as well.
Exactly. Yeah. And those of you that are part of Operation Surge Strike, come back. I'll be back at 1:00, and we'll be going to be getting into everything that we don't talk about, that we don't have time to talk about here on this program. But for those of you that don't know, Operation Surge Strike, that's what I like to call our tailor-made strategy to profit from this type of volatility. Right? When we look at volatility in the marketplace and we see these big upswings, we can profit from the upswing, we can profit from the downswing. I'm going to show you a little bit about this and talk about what this is. This is basically, think about this. What we're doing is we are trying to capitalize off the Reddit crowd, off the Robinhood crowd. And so if I were to give you a little bit of education on this, it would look like this. So we like to look for volatility surges. We like to trade into the surge. And then there's a lot of times we like to trade that surge when it drops. All right. And I'm going to talk about each one. And I'm actually going to bring up Alibaba as an example, both the losing trade we had in Alibaba because we had a loss and the winner. So we do a two different types of volatility trades here. One is what I like to call when the tide is rolling in. When the volatility is rolling in, we like to be on the buy side of that volatility. And by that, I mean, when I was talking Thursday night, and I was talking on the anniversary show, I was telling Garrett that what we like to do here is we like to do something very similar to taking an event like, all right, here we go. Isn't Final Four happening here real soon, Eric?
I believe it is. Yes, we are.
We got the Final Four that's happening. And I think the biggest game out of that's going to be North Carolina and Duke. Now, I don't have a North Carolina hat and I don't have a Duke hat, so I really don't care who wins. But if North Carolina beats Duke, and this is Coach K's last season, I don't know Coach K, and I'm just telling you what I hear. But he's obviously looking for Duke to beat North Carolina so he can cap off his career and walk away with a win. But if North Carolina comes in and beats him, that's going to be impressive 2 years in a row. Here's where I'm going. What the heck does this got to do with Operation Surge Strike? Okay, if you got tickets to the Final Four and you bought them weeks ago, and let's say you got them from right there from let's say you owned season tickets to one of the host cities, and you were able to get those tickets at their fair value price. You're sitting on a gold mine right now, especially if you got tickets to the Duke North Carolina game. Because if you got tickets to those, you could sit outside, or you could post those on StubHub, or you could post them on Ticketmaster, and you're going to get thousands of dollars for those tickets. It's going to be insane. And those ticket prices are only going to get better as you get close to tip-off. But you know what happens after tip-off, Eric? Now the game is in progress, and as every minute goes by, the ticket value is going to diminish. So how long does a basketball game actually last? Do you know, Eric?
Would that be 80 minutes?
Yeah, it's only a couple of hours when you throw the commercials in and the timeouts. And so what you're talking about tickets that are worth thousands of dollars that are going to go straight down to nothing. I mean, after the game, you'd be able to sell that ticket on eBay and get something for it. I mean, even more if it's signed. But what I'm saying is that event is over. When that event's over, you get a crush in that ticket price. It's the same thing we do with earnings. We find, now, Every company that's listed, Eric, you know this, every company is the publicly traded company has earnings, and
Of
those earnings
course.
come out quarterly. So we know that event. There's other events that happen too that Brutus will tune in on, but most of the time those trigger events are going to be earnings. And so we know that an earnings event comes out. Now, there are going to be earnings events just like basketball games where the ticket price isn't going to go up that much because it's a no-namey. It's a no-namey school. And so, the games that I like to watch, and I don't watch basketball, but it's kind of like football. I only tune in when the playoffs are happening. I only tune in with the Stanley Cup playoffs. I only tune in when it's playoff time. I want to see the best of the best going at it. So you'll get different games that are happening, and I'll watch one game over another because one game's more popular. One game's pumped up more by ESPN. Same thing happens on the financial channels, guys. You got companies that are more pumped up than others as they're going into earnings season. And Brutus is kind of like a scout. He's out there scouting those names that are likely to have the biggest pop in profit potential. Okay, I'm going to share one of those names with you today on something that we're looking at for the month of April. But basically, what we're looking for that rush in for volume and volatility. That's what I like to call tide rolling in. Now, there are on occasion trades that run patterns of volatility running out, and we try to capitalize off the crush. And so all of this, we used to chart this like a captain used to, before Simrad and before, GPS. These guys used sextants, all right? They use sextants. I can't even say it. To actually get an idea and compasses to gauge where they were in the ocean and where they were going. And so now they got GPS to do it. Well, we used to do the same thing. We used to just sit there and take this data by hand, and it was so hard to find those handful, and I mean, those 5 or less that every quarter worked out really well. And then one would drop off and we'd have to go looking again. It was a lot of work. Well, now Brutus takes care of all the work. It does all the work. It serves it up to us on a silver platter. And now it's just for us to vet for the very best ones. And that's what we do. So, let's look at, we had top volatility wins. We had a really good first quarter. If you watch Monday Morning Live, like I said, the anniversary, we closed out a BABA trade on Surge Strike for a loss. And I showed that loss last Thursday night. We have losses. Guys, there's nobody on the planet that trades 100% with no losses. Anyone that tells you that is a liar or they don't trade, okay? We have losses too. The thing is containing those losses and going through the short-term bumps to look for the long-term consistency. So we were transparent, and I showed you our open positions, and I also showed you where that Alibaba trade went, all right? But I also said, but we came right back. Brutus flipped the script, came right back with a new trade, and it detected that opportunity. I did not show that trade last week, Eric, because I didn't have enough time. But
we have time right now.
Pop it up on the screen right now.
Of course.
Here's the trade.
Want me to read through this trade for you, Tom? Give you a break?
Yeah, please.
All right, so it's time to trade your BABA profits. Action to take is sell to close the BABA April 1st, 2022, $104 put, and buy to close the BABA April 1st, 2022, $105 put at a limit price of 10 cents, which is 20% of your original entry credit. After entering your new bullish position on Friday, Alibaba ran up hard as expected, leaving our bull put spread in 80% of max profit territory. If you're not out already, time to bank those profits, and here is how to do it, so pay attention. Action to take is sell to close the BABA April 1st, 2022, $104 put, and buy to close the BABA April 1st, 2022, $105 put at a limit price of 10 cents, which is 20% of your original entry credit. Congrats on the great win.
Now, Eric, you just read out something that anyone who is part of Operation Search Strike, they see these. These are alerts that go out on a regular basis. Entry alerts go out that look like that. Exit alerts for profits go out and look like that. Any stop losses we have go out and look like that as well. All right. Put up my screen. I want to show everyone Alibaba for a moment. So here's Alibaba. All right. And I want to share with you kind of what we're looking at. So Brutus caught this free fall. And again, nothing is 100% guaranteed. We actually saw one day where it moved in our favor and then bang. And that big gap up took us above this area here, which was in the 90s. And that stop lossed us out. Right about here is where we we got our stop loss. Then Brutus reevaluated and said, you know what? We get above 105 here. This thing is flipping upside down, right? And that's what ended up happening. We got it to the 105 level again. And we said, you know what? Here we go. Here's a trade we want to take. Got filled, and then boom. And we stayed up here and here, and literally within 24, 48 hours, we're taking that trade off for a profit. And so guess what? That took care of the loss. The loss happened in 2 days and the profit happened in 2 days. And Brutus kind of, said, oops, I'm wrong, but here's a fix it. And that's what we ended up doing. So while I got the charts open, let's take a look at some of the names that are coming up in terms of what we're looking at. Next week's really a dead zone for earnings. We've got earnings that are popping up. I want to share with you 5 that we're looking at, but this is not the best one. I'm holding the best one until the end of the show. So let's start with number one. Number one of the 5 we're going to be following is KMX. This is CarMax. Take a look at CarMax. Now, what I want to do with these is I'm going to dump these back 90 days because I want to make sure you see at least what happened with the last earnings. Now, CarMax heading into its year-end earnings was trading around $150, and we've seen that drop back to 95, and we bottomed off of 95 once and twice. We've double bottomed. Today it's getting a little bit of a bump, but we got earnings coming out in 14 days. Now I'm going to add the next overlay. This is what Brutus looks like, guys. It looks at this implied volatility number. Do you see this move? All right. Again, let me just share this with everyone, Eric. Look at this. All right, it's hard to predict price from earnings because sometimes the earnings come out and they're better than expectations and the price drops. And sometimes the earnings comes out and it's better than expectation and the price jumps up. And sometimes earnings comes out better than expectations and it just kind of wiggles. But when you can understand volatility, there are certain stocks that pump and dump with earnings. Pump, dump, pump, dump. By the way, this is Stitch Fix. It has it typically has a big jump and a big drop. The weeks heading into earnings and the days heading out of earnings. So I want to share that quickly with everybody. But now let's go back and let's look at this chart of CarMax. Move up into earnings and then drop. All right. Now, who made money at the height if they were buying call options ahead of CarMax's earnings? Nobody did. Who made money if they were buying options ahead of buying put options ahead of CarMax into earnings? I'm going to tell you, no. I mean, if you bought at the height here, you were basically buying around the 130. And what happened was a couple days before, and that morning, we saw CarMax up. So you didn't make money because if you're buying puts, the stock went against you. But look what happened by the end of the day. You're like, oh, yeah, it's coming back. It's coming back. Still didn't make it. Basically went just below your price of 130. The time value eroded faster. If you've ever bought options before and you've seen them drop faster than the price moved in your direction, you took advantage of being on the wrong side of volatility. This is the area to be the option buyer down here. Now look what's been going on with CarMax. As it's been going lower, vol's been creeping up. In about 14 days, we're going to see earnings. You know what we're going to see in about sometime next week? We're going to see volatility start to curve up again, and you're going to see this thing start to launch. And if Brutus looks at this and gives us a favorable signal, then we're going to be looking to get in. Next, JP Morgan. All right, so, the financial stocks, well, they have not been immune to the volatility that's been happening recently. You can see what JP Morgan did. Now, JP Morgan had earnings that came out, and it moved sideways. This was not a Brutus pick last quarter, but we've seen financial stocks come and go with Brutus. All right, so what's going on since then? Well, we've seen volatility spike really high out of the Russia-Ukraine conflict. Now what's going on? We're seeing a jump up, and we're seeing that volatility kind of crush out a bit. So in order for Brutus to get excited about JP Morgan, we're going to need to see volatility turn around, and we're going to need to see this kind of a move that we saw back here in February happening again, starting in about a week. JP Morgan, all right, what's 28 times 2? 56. This thing nearly doubled. What that means is the option premiums, the time value in the calls and puts that are near money, actually very close to doubled during that week heading into earnings, that week and a half heading into earnings. Since then, we've kind of seen it chopping back and forth. Big move up again. This was because of Russia and Ukraine. Big move back down. Now we're setting up 16 days before earnings, which will be announced on April 14th. Will Brutus pick this? Don't know. Next stock, United Healthcare, UNH. So what is UNH? What's been going on with UNH? Well, when you look at healthcare stocks, you got to think of COVID, because COVID and boosters and, we know United Health Group isn't jabbing people, all right? They're just paying for the jabs. And so, as you can see here, and getting paid for the visits. So you can see here that United Healthcare, $440. This was back right around Thanksgiving weekend. Now, we're at new highs. We're coming off new highs right now at over $510 a share. It's currently at $512. Look what's going on here. You saw the vol jump up as we had a pullback that happened at the beginning of the year. But the vol is getting close to the low. This is something that I like, because it's possible we could be buying into these call or put or straddle options ahead of the earnings for United Healthcare, which, according to my chart, are in 16 days. That's also in the middle of April, 4/14. All right, I see that. And then number 5, let's go right back into the bank stocks again. Only this time I'm actually going to look at a real bank stock, and that is Wells Fargo, WFC. So WFC looks kind of like this. And again, you've got a double bottom that occurred on Wells Fargo back here at the end of December. And then once again at the beginning of March, we've jumped out of this. Financial stocks really got hit hard off of Eastern Europe. But we're seeing the same thing that we saw with the FANG stocks. We're seeing some move up in financial stocks. 16 days from now, Wells Fargo will announce their earnings. If you take a look, we got a little bit of a bump up ahead of earnings before, but nothing quite as strong as what happened heading into the conflict in Europe. So there you go. That's WFC. These are 5 of several we are looking at. But which one looks today? All right, it might change, but today, Eric, which one looks like it's the best? I'm going to share that with everybody in a few minutes' time. How about we go and hit the chat, take a little bit, look at some charts. Let's pull some charts up, Eric.
Yeah, I love that idea.
On YouTube and on Monday Morning Live. And you tell me what chart you want to look at, and I'll show you how I look at it.
All right, Tom. So I'm over here on the site here, and we have Sean wants you to take a look at ZIM, ZIM.
ZIM. And again, guys, any charts you're sharing with me, I'll say this now. I only look at charts on stocks that have options or ETFs that have options. So if it's optionable, we're going to look at it. Because that's the main area I move into. All right, so again, here's ZIM. ZIM doesn't announce earnings for 43 days, so we're not even going to look at it in terms of what Brutus may or may not think of it. And that's because it just recently announced earnings, and we saw that jump in volatility ahead of earnings which is pretty sizable. You're talking about something that was trading at about a 60 that jumped up to about 110 before the earnings announcement. Now, what's interesting also, because this is a shipping service, it too even moved up after earnings before seeing a big implied volatility drop back down to 60. A weird event, one that Brutus could not capture. Brutus can capture the before IV and after IV events. Where Brutus pulls back and says, no, syntax error, is when you get a move after earnings that actually continues to move higher into new all-time highs. Higher lows, higher highs. Looks really interesting that this one is moving a lot like, when I look at this, I look at the price of oil. And I say, wow, this thing's moving around like the price of oil. Maybe so, since it is a shipping service company. What else you got for me, Eric?
I have RIVN from You Don't Know Me.
Oh, Rivian. We made some money with Rivian. In fact, a lot of people in this room did, not just our Operation Surge Strike members, but we threw Rivian out there as a Brutus trade, and it performed really well, coming down in here before earnings. And then look what happened after earnings. It even dropped even more. Now, Rivian is doing what everybody else is doing right now. It's getting a little bit of a move back to the upside. The big volatility came in. This was the Brutus move we took advantage of, buying these options and then selling them. I think it was a day later, if I can remember, coming into that earnings report. And then it just got bumped back down. But even though the volatility, the red line, looks like it's low compared to where it's been, this is still pricey options. This is a hard one to look at because it's kind of like an airplane that's coming down and it's hitting the tarmac. What's the tarmac, or what's the ground level look like on Rivian? Well, the ground level right now is in the mid 30s. So if you like this stock, if you want to own this stock, I'll tell you what, tune back in with me tomorrow because I'm going to show you a strategy. And you know what, Eric, remind me, we'll use Rivian as an example and see if we can pick this stock off at those lows that happened a couple weeks ago and get paid to do it. Because I want to show you guys a strategy, and I want to talk about one of our research services that's up 61% on all of our open positions, winners and losers. And it's also up in above 75% on the closed trades for this year. Best research service in the entire suite of not only what I'm doing for Q1, but what everybody here at Monday Morning Live is doing for Q1. No one's even close. I mean, it's like, if you've ever seen a horse race and you see first place and then you wonder where all the other horses are, they're out of camera. That's kind of what's going on with what I'm going to show everybody tomorrow. I mean, we've got, it's not a horse race. It's all of a sudden who's gunning for second place because we're so far ahead of the pack with this strategy. And it's a really good one too. All right. And I want to share that with everybody. We'll share it tomorrow. We'll talk about Rivian tomorrow on it and talk about ownership of Rivian if you really like this stock long term. Again, like this strategy, nothing that I have is 100%. No guarantees on the future, no matter how good the past looks. But I got to tell you, I mean, we started this particular research service out of COVID in 2020. And in all of 2020, we didn't have a single loser. In 2021, I believe we were above 90% win to loss ratio, and we're killing it this year too. All right, so let's get back to that one, Eric. Let me get back to you on that one.
Sure, of course.
The right strategy.
You want to grab one from over
Eric,
on YouTube?
Yeah, Eric Vandy Zandy. There's the Vandy Zandy. I had a good friend with the last name Vandy Zandy that I grew up with when I was just a wee little boy. And Eric's saying GM. All right. Let's see. So GM. Wow, there's a comment on my YouTube page. I have to bring it up. It has a lot to do with volatility. All right, we'll bring it up. It has volatility in more than one fashion. A comment, and I'll get to it in just a second. And it's the comment that Shopping Cart Boys is saying. Really good really good comment, and it bodes well with what we're talking about today. All right, GM, here we go. So General Motors, again, it's kind of like that Rivian, that concept, but here's the difference between General Motors and Rivian. General Motors has been around a lot longer. It's easier to predict for analysts to come closer to being in line with numbers month to month, and therefore the volatility on General Motors is going to be lower. Yes, its lows are down here in the 34 realm. This is the vol number. This is the stock price number. So yes, volatility hit 34, and yep, it's coming back down again. GM does not report earnings for another 28 days. Its high in volatility corresponds with what was going on earlier in the month with the lows with everything. It did go from $66 a share down to 40. It got a lot taken away from it. It's having a really good day today. It's capping off the last couple weeks. If you like GM, we could look into that stock tomorrow too. So Eric, put that on the legal pad, Rivian and GM, and we will look at them with the with what we're covering. So that's what we see happening with GM. The options are getting cheaper. We got a while before we hit that earnings date. That earnings report for GM isn't coming out until the 26th of April. So we got some time on GM for sure. So that's what we see on GM. All right. How about we do one more, and I'll let you pick it, Eric.
All right. Well,
we'll talk about that number one stock that I'm looking at coming into April.
All right. I'm going to go with John Paul. He wants to take a look at MU.
MU. All right. So Micron. Look what's happened here. Big Brutus event, and then the crush. And then you see the big Brutus event. And you know what happened here? We took a small loss on. We're taking a small stop loss on our Brutus event because it didn't go up, it didn't go down, just kind of went sideways. Got a little pop today, dropping a little bit afterwards. So the vol definitely was on our side. Okay. So now, what do you do with the Micron? Well, guess what? We got Micron coming out today. The earnings are coming out today, and what's going to happen tomorrow? Tomorrow could set us up, those of you that are Operation Surge Strike members, tomorrow could set us up for potentially another backwards trade in Micron, just like we had with Alibaba, right? So we could get a reverse trade. I don't mean we're going in the opposite direction. Those of you that are thinking, oh, all we got to do is just go the opposite way. No. We're going to go the opposite way with volatility. Instead of buying volatility like we've done with Micron in the last few days, we're going to possibly look to sell that volatility. But we need a couple things to happen. And that's what Brutus is going to be doing. Brutus is going to be on watch to see what happens with Micron and to give us its artificial intelligence. And then from there, we'll take a look and see if we have something worth doing there. All right. So, Eric.
Yes, Tom.
Big question. Robert's asking, what's the play for today? Well, we're in a dead zone right now for earnings. All right. So earnings we're kind of in that famine spot. We're on watch right now. But I want to show you what I see on watch that's coming up for the month of April. Take a look at this. So this is our Brutus. You see it there. All right. Optimal calls and puts. I ran this for today. And I'm going to show everybody it's in here, the half that, that everybody else that's will see most of this. But here's the half of what's coming up in the month of April. Look at all these trading opportunities that we see happening in the month of April. All right, 75% winners. But then you come up here, you see these implied or these return on investments, looking at the past patterns, 35, 40, 42, 45, 47. Here's a 54% average return on investment. What stock is that? I don't know. But I'm going to give you the one that's all the way up here, 77, 79, 90, 98, 103, 103, 100. Here's 171% average return on investment. It had a 312% move. There's a 23% loss. There's a 155% winner, and there's a 244% winner, all on the same stock that, guess what, has got an earnings date coming up, and this is also the end of the month, but I want to show you the best potential opportunity that we're going to be looking at in the month of April. All right, serving it up to you rather early, so some things could change between now and then, but that stock is, let's put it on the screen for everybody, XOM. Yep, Exxon Mobil. All right. So Exxon Mobil, if I go back and I just look at this chart by itself, I see that we had a price move where Exxon Mobil went up into earnings. So maybe it's a call option we're going to be looking at a week or two ahead of its earnings. So you can see out here, we were at 2 weeks out. You're talking about $72 that became above 80. That was a nice move. All right. Looks like that 300% move that I was talking about. Then we had, of course, Exxon moved up because of what's going on in Eastern Europe. Back down, up, down. Look at what's going on with the volatility. Volatility is right back down here, and it's trading close to 32. When it was trading at 32 before the last earnings report, we were sitting right out here. It was close to the end of January. Right, and the earnings came out around the first week of February, so about 2 weeks earlier. So, is it a call option we're going to be buying? Is it a put option? Am I missing something? Because I'm only looking at one earnings report here, but I'm going to tell you what I believe it is. Okay, I haven't looked at Brutus yet. I believe it's either a call option or it's a straddle we're going to be looking at doing, and we'll talk about this more as we get into this again next week, and we get into as we get into the second week of April. Then this is going to get clearer. This is going to be a clearer picture as to what we're looking at. So, you know what time it is, Eric?
I do know what time it is. This show is just about over, but we're going to be back.
Yeah.
We're going to be back in half an hour in the Surge Strike room.
Yep, half an hour. Premium subscribers, I'm going to grab a quick break, and we'll be back. Myself and Mike Wade will be joining all of you in the premium room. We're actually going to get into more details, open positions, closing positions, education, and of course, trades that we see coming up on the horizon for our next earnings cycle. You want to be a part of it? I believe you got a phone number on the screen right there. Yes, it is. And of course, links as well to be part of our Operation Surge Strike. Otherwise, see you same time, same channel tomorrow. Have a great rest of your day. See you, everyone.